in it, but let's just say you're thinking about getting in this business. You want to learn a new skill, right? Or do you want to really just kind of just add another opportunity to your real estate background? Or do you need to be really successful in this? Do you need to be, I got to do this, right? You got to have that kind of attitude. You got to be what I call interest versus committed. Interest is you're interested in this, and let's try this thing out and see how it goes. If it didn't go so well, it's not for me, right? So if you're interested and you just want to learn, that's great. But if you're serious about wanting to succeed in this business, you got to be committed. You got to be committed to the outcome. You got to be more committed to the process more committed to the outcome than the process, right? And I'm going to give you the process to go through this thing. We're gonna go this program here, this training event, and it's all about our goal at the end of this program is to teach you the right way to raise money using this 8-step system right here, 8-step process to raising money to fund your deals. It's really important that you get all the way through this thing. I got a case study that I want to walk you guys through that you can learn from, and I'm hoping it's going to give you new ideas. And at the end of the program, I'm going to talk about something we have coming up that really is new. It's never been done before, and it'll change your game. But that's kind of the big picture stuff. As we get going, we launch off. Strap on. We're gonna push off the dock and out we go. Thought I'd just give you a little bit of background about me and what I'm all about. I've been doing this for a heck of a long time, 35 years. I oversee the Value Hunt Academy. I started it a number of years back in early 2000. I've been involved with all kinds of real estate, specialize in multifamily towards the end there. Written a bunch of books. I just finished another book that's called The Eaglepreneur Breakout. It's all about how to get stuff done, how to become an overachiever, or not an overachiever, but a high achieving person. Because a lot of people go through this process and they don't realize that it takes a lot of hard work, and so they start off scared. There's the chicken, Clucky the chicken. And then as they start to go forward, they become the eagle, champ the eaglepreneur. That's the name of the book, Eaglepreneur Breakout. And it's all about that transition. That's what the whole book's about. And we're going to talk a little bit about this through this process. But that's kind of my background. You can see it right there. Whoop. This is my website that I do a lot of work from. You can see I've got a program coming up right there. I recommend, if you don't know much about syndication, you want to learn some extra stuff, you go to the site, Value Hunt Academy, and there's a syndication basic video series. It's all like 2 or 3 hours, and you get all the basics. This is all free stuff here. I got over 600 articles on here, interviews, seminars, all that kind of good stuff. So take some time, go over there. It's all free to help you out. But I'm going to talk about today's agenda. So what we're going to work on today is the wrong way, and there is a wrong way to raising money. And most people do it. I would say 95% or more of people go this route. So I'm going to teach you the 5% route, the way that it works, the safe way to do it, right? So we're going to talk about that. We're going to talk about the 8-step process. I'm going to get into each one of the 8 steps. It's obviously a long process. It takes a lot of time, but I'm going to give you the overview and give you some details to help you, to give you some ideas. We're going to talk about getting your deal closed after you get all the 8 steps done. I'm going to give you this case study. It's going to be about Chris Haskel, right? I'm going to talk to you about him and what big thing he did. And then I'm going to take you through his pitch book, right? One of the 8 steps is building your pitch book. I'm going to show you his pitch book because he went through it. And then I'm going to review an opportunity that he actually did. And this is what I want you to stay around for, because this is important to see what you can do, just like he was in your spot right now. And I'm going to show you a case study, what he did in such a short period of time. So stay tuned for that. So let's talk about the wrong way to raise money. It is a huge mistake, right? The first thing that most people do, people that come to me, and also even some people that have been in the business for a long time, They come to me and they think you got to have a deal first before you raise the money. Think about it. You got to have a deal first before you raise the money. That's what I thought when I first started. It was wrong. But what we found out, the right way to raise the money, to start this process, is, this is phase 2. They just go out and raise the money. They get a deal. They got to go out there and they think they got to go out and raise the money. So they go out and raise the money. And it's very, very risky because you don't have anybody lined up. Right? Maybe you got a rich uncle or rich dad or somebody that's rich that's going to give you the money. That's not a big deal. But most of us don't have that. We've got to go out and find a way to raise that money. So what we do, the approach we take is we start in phase 1. We don't start in phase 2. We start phase 1. We build our pool of investors first. So what we do is we put together a pitch book. We're going to talk to investors. We're going to build our list, obviously, and then we can put together a database of investors. And we get 10 to 15 people that say, yeah, I'm excited about what you're doing. Bring me a deal if you find one. So then once you get those people, then you go out here and then you start in phase 2 and you get the deal closed. Okay. And here's what it kind of looks like. This is a 6-step process that we're going to talk about, mainly the first 4 steps. We'll also talk about 5 and 6 and 7. But anyway, so the first thing you're going to do to build your pool of investors before you even look for a deal, you're going to create your pitch book. This is your business plan. This is your investment strategy. This is how you're going to make your investors money. This is how you're going to talk to them about it, right? So you got to do that first, and then you're going to go out and build your list of investors. There's 3 lists of investors we're going to talk about today, types of investors. You're going to build that list, and then you're going to take your pitch book out to those on your list and have meetings. And there's a certain talk you go through when you talk to these investors to get them excited about what you're doing, because that's all you're trying to do. You're not trying to sell them any deal. You're just trying to sell them your idea and supporting data on why your idea is so good. You're going to be solving a big problem in a big market, and that's what's going to get them excited. And your plans on how you're going to execute that also gets them excited. So they get in your database. Then you go out and you make sure you stay in contact with your database. Relationships are everything. I don't care what business you're in. You got to build relationships, right? Any service or a lot of product business too. You got to build relationships. You got to build the relationships. Then once you have 10 to 15 people build up in the database, then you go out and find a deal. Start in phase 2. You're going to go up here and you're going to try and find a deal. And then once you find that deal and you like it, you're going to go out to your syndication attorney. You're going to create all the documents you need to create. And then you go out in step 6 and you're going to raise the money. You raise the money and you get it closed. And then step 8 is kind of the gold step, and taking care of these investors and the deal you bought and bragging to them about what you got. And make sure you take before and after pictures, because they get excited when they see those pictures. So that's kind of the big picture. We're gonna dig into each one of these steps, but the first 4 steps right here: create your pitch book, create your investor list, go out and meet your investors, and keep building that database. This is the most important part, because this is no big deal. You just get your documents. When you go out to raise the money, I'm going to show you a little bit about that. You go out to raise the money and you haven't done a good job building these relationships, you're going to have a hard time. The whole idea is to keep these guys excited, really excited. So when you get to this stage, they just can't wait for it because they already know it's coming. But I have had a lot of clients that, and I preach this, they go out there and they get a huge list of investors that are interested. That takes them 2-3 months to find a deal. They finally find that deal, and then never stayed in contact with them, never building a relationship. Now they go out to them. They don't even know what's going on. They're not excited anymore, and they put their money somewhere else. Some of it, anyways. So you got to build that, and we'll talk about that in more detail. But that's kind of the process we're going to be talking about. The first step is the pitch book. This is my pitch book, my first pitch book I did. Actually, my first pitch book was back in 1970. What was it? No, 1991. And it was just a step above a brochure, right? Not much better. But over the years, I developed a niche strategy. This is a strategy that was going towards the niche market, the Hispanic market. We were buying properties position them towards the growing demand of Hispanics. And so we're buying B and C properties. We're repositioning them towards the wants and needs because we know what they want. Because our philosophy is find out what they want, go get it, and give it to them. Right? It's our community lifestyle approach. And so we were using that approach, and we were filling the property up nice. And we're only looking for properties that we can put a tennis court on, because my customers, my tenants, love to play tennis. I'm sorry, golf, soccer. So we're looking for properties that you can play soccer on. So if we find properties that had a tennis court, we could build soccer field on, right? So that was big. We'd have soccer tournaments, we'd have soccer clinics, we'd have one-on-one score-offs. We had all kinds of things that kept them engaged. And we have some of the pros that come by and do some talks to them. But we're looking for places we could put, a barbecue area, a lot of kids and a lot of families. We had social centers and so forth. So that was our strategy. And we're looking for properties just like that. If we look at a property and doesn't match that strategy, we're not buying it because we know it works. We have a 4-step system that works. But anyways, so this is kind of the front page. It's kind of tease people. You're looking at unique investment strategy targets growing market. So here's kind of the 10 basic things that we put in a pitch book that's critical. We put in a title page, right? A title page, you just saw a title page, is kind of tease them, give them a little hey, we're looking for these type of properties. Here's our niche. We're looking for our investment highlights. Is everything just kind of like 4, maybe 5 bullet points on the reasons why we're going to be successful. If we got a successful niche, we were great timing. We have competitive advantage, all that kind of good stuff. I'll show you one here in a second. Then we got the management bio. Management bio is pretty much who you are and your background. We're going to put that in there. Obviously, some people have a weakness with that. There's ways to overcome that. Track record is the same thing with the managed bio. If you don't have a track record, bring somebody in. A lot of my students use my track record, which helps them step on their shoulders to get these deals done. Investment strategy. This is one of the most important things. This is kind of the core of the pitch book. How are you going to make your investors money? What's your strategy to do that? Right? And we'll talk about that in a second. Keys to success. Why are you going to be successful? Investment life cycle. Investors don't know what's going on, so we're going to create a little chart so they can see. Partnering with you and your company. Why should they partner with you? What is it a good? You guys do great due diligence, and you really understand your properties. Do you have that competitive advantage is a good thing. So we'll talk about that in a second. Contact us page is pretty self-explanatory. So here's a couple samples of pitch books. Just you can get an idea of different pages that we've created for people, and they've created themselves actually. But you can see on the left side title page over here. This is a strategy and acquisition strategy on one page, trying to show a picture of being unique and different, getting outside the box. The competitive advantage here. This is what makes you different than everybody else. And I teach this in a more advanced course, but it makes you stand out, just like you saw the Hispanic niche. Because most people think apartments are commodities, right? They're just for rent to anybody and everything. But if you can create a lifestyle, think about going to some of these restaurants. They have a theme on them. They get known because they're specialized in something, right? They have a niche. And so we advocate having a niche. And here's a sample of property from someone else. So there you go. So here's kind of the places we're going to go to find money. This is our list. This is the next step, right? Step 2, create your list. And I have you create 3 lists because they're all kind of different. Family and friend money is a little bit more risky, but it's probably where you're going to get a lot of your money if you're just starting out, right? If you're just getting going, you don't have any notoriety, you're going to start off with family and friends. Maybe you got a business associate. This is the biggest one of all. People you know, previous life, you know, jobs you've had, job you're in right now, some of the vendors that you're working with, some of the, you know, professionals, whatever it is inside your business, or your job, or maybe you're an entrepreneur, whatever. That sphere is large. So you're really going to need to dig into the business associates. And the last one's the professionals, organization, and trade. You think about your attorney, think about your accountant, your tax guy. All your professionals would go there. Organizations were more like you're part of a church, or, you know, those types of organizations. A club, you're part of a club. You're part of a meetup or something like that. That's one. And then the last one's a trade. Trade is more trade associations, like you're going to go to real estate trade associations, or maybe it's another trade association. It doesn't even have to be real estate. All you got to do is get in there and build relationships with these guys, and you're the real estate guy for them, right? So those are the places you're going to raise money. Those three basic places you're going to raise money. Investor meetings. Now, these investor meetings, you're going to go to people out of the gate. You're going to take your pitch book to them. Out of the gate, you're going to be talking to them about the big picture and what's the core. How are you going to make them money? I recommend going to easy guys first. People that are easy, that give you feedback, and you can practice on, so to speak. So once you start to get better at your talk, you're going to go out to the more influential, wealthy guys, because you need to hit these guys, and you can't mess up with these guys. So you're going to practice on easier guys. But as you start talking your talk, you're going to get better. And your talk's going to be about the problem, solution, opportunity. Problem, solution, opportunity. Those are the three things you're going to touch on. You're going to touch on, hey, Mr. Investor, man, there's a huge problem out here. I just uncovered it. Did you know that Hispanic demographic is growing like crazy? They're growing by 30% a year. Whatever, I'm just making that up right now because I'm out of practice. But 30% a year. There's an underserved need. We don't have enough middle market Hispanic properties, lifestyle properties in the marketplace. So the solution is we're gonna go to this marketplace, and we're gonna buy certain types of properties that match our investment strategy, and we're gonna reposition them to the Hispanic lifestyle, giving them the things they want, soccer fields and so forth. And doing all this is going to allow us to reposition these properties, raise rents, and make a lot of money. Well, most of our properties, Mr. Investor, we raise rents 25% just by putting in this theme. So that's kind of how you're going to talk to them. You're going to rehearse this. It'll get easier for you, and start to get more yeses, because what you're looking for is the big question you're going to ask. When you get done with your talk, you're going to say, if I find a great opportunity that matches the plan we've been talking about, should I bring you the investment? Should I bring you the deal? Are you interested? Do you want to be a part of this? And the ones that say yes, they go in your yes database. And then you start to stay in contact, and we'll show you kind of how to do that. But you got to get them hooked in. You don't want any maybes. You want, I'm interested in this thing, right? Because it's just going to muck up your time. Okay. Here's the database. This is your. I don't care what CRM program you use. It doesn't really matter. Just so you're staying in contact with them and making some sort of notes, some sort of record of what you're doing. We have a whole spreadsheet that we use that outlines this, so you can track all this stuff. But you can just use as easy as Outlook, right? That's easy. Most people have Outlook or some type of contact system within their software for their computers. But some of the things that you're going to do to stay in contact with these people are you're going to call them. Obviously, that's the number one thing I'd like you to do. Touch base with them, send them articles about your investment strategy, things that may be changing. Go out and have a drink with them. Go out and have some lunch with them. Go out and take them to the golf course. Go out and take them to a baseball game. I don't know. Something that you guys have in common. Get to know these investors. They're going to be with you the rest of your life. So get to know them. And the better you know them, the better, more success you have. What I used to do is I used to take a little notepad and I'd write down all the things that are going on in their life. So when I get back to them, I go, hey, how's your daughter doing at college, her first day of college? You know, those types of things really hit home with these guys. Send them success stories. Other guys that are buying properties, sold properties, and had a lot of success, send that to them. It could be an email, whatever. Wine tasting party. Take them to, and then we kind of something I just talked about. But it's important for you to stay in contact with these guys and really build those relationships. Really build those relationships. I've got a Facebook page. I haven't been too active on it recently, but I was very active. And I got an article on there, a post that you might want to check out. It's about building relationships. And I got the letter I'd write these guys. So I'd go out and meet these guys in whatever city they're in. And I'd take this and I ask them all these questions of what they're looking for and get to know them. And then I'd on my stationer, it just has my name at the top. And it's like the size of the envelope is, like an invitation size to a wedding, right? So those envelopes usually get opened up. It's handwritten. And I tell them, thanks for getting together. Appreciate it. Look forward to staying in contact with you. I'm excited about working with you. All that kind of good stuff. You'll see what I wrote in there. And then I send that out from the mailbox that I left from. So if I'm in, I don't know, let's just call it LA, right? I flew into LA or something like that. I don't go back to Texas. I fill out that envelope right there, get a cup of coffee, and put it in a mailbox that I just left from. Blows them away. Blows them away. So the actual Facebook is the Syndicate Game. The Syndicate Game, that's what it's called. So you can punch it in there. And there's other good stuff about building relationships. So that's what you're going to do. You're going to build these relationships, get solid with them. Then when you get 15 of those people in your database, you're going to go out and you're going to start looking for property, right? And then once you find the property, you put it under contract, you got to get your syndication documents. Don't let this scare you. Guys, I got to tell you, so many people get scared by these legal documents, man. It's just a legal thing. You tell them what you want in the documents, they'll put it in there. They'll give you advice. They'll give you counsel what to put in there. They're just a vendor. They're not a business. They're not business people like we are. They're just a vendor that's legal, right? They understand the legal process. That's what we hire them for, right? You hire a contractor to go out and put a roof on or put up some drywall, whatever. They're a contractor. Property manager is a contractor. The landscaper's a contractor. The attorney's a contractor, right? Going to maybe get a real estate attorney, review your real estate documents. They're a contractor. You tell them what to do, and they do it, right? And they'll give you good advice and good counsel. So the first thing you're going to be getting is investment offering circular. This is the disclosure document. This is the document that says, hey, we're going to lose all this money, Mr. Investor. It's a big chance. There's a lot of risk. We're going to lose this thing. It's all in capital letters. You can see it there. But then also there's a business plan in there, right? And how you're going to make all this money. So it's kind of weird, but that's what you got to do. This does disclose all the things that could go wrong. I had an interview. I did some podcasts. I started podcasts 10, 12 years ago. When I don't think they had a name podcast. And one of the guys I interviewed, I've interviewed a couple guys. He's a friend of mine, Sam Freshman, right? He's been in the business at the time, 45, 50 years. Now he's been in the business 60 years. As a syndicate, he started off as a securities attorney, creating documents for other syndicators. He saw all the money in syndication, so he got out of the legal business and became a syndicator. So I went and interviewed him. One of the questions I asked him, he embellished and started talking about that you got to disclose everything. Even if you don't even know anything about real estate, just say you don't know anything about real estate, and if you disclose it, it's legal. That's what he tells me. Isn't that amazing? But most of these guys that are investors take it to an attorney, and they'll find stuff like that. But so that's the investment offering circular. The operating agreement is really a partnership agreement. That's just the rules and regulations, rules on how you're going to operate the partnership, the limited liability company. So it talks about, how much, who contributes what, classes of shares, how much money you can spend as a general partner, as a sponsor, the managing member, how much money you can spend to rehab the property, or how much money you can spend to fix things. If there's a dispute on the property, how do we resolve the dispute? All these types of things are covered in there. In this, and it's just basically a business plan. You're signing off on the business plan. When do you distribute money? How often are you going to distribute money? What are the percentages? Who gets what? Who gets, so all that is in the operating agreement, the partnership agreement. The suitability agreement, the statement of suitability and subscription agreement. You gotta qualify your investors. You have to do this, right? There's different types of partnerships or syndications that you can create, but the basic one, if you're going to do there's a Reg 506B under Reg D, and you can have 35 accredited investors. No, you can have 35 sophisticated investors, as many accredited investors as you want. But you got to have a subscription agreement, even if you're accredited investors. You got to come out and say, hey, I'm this kind of person. I do this. I make this kind of money. I make, you got to let them know that, let the sponsor know if you're qualified to be in the investment. So this agreement they give you, your syndication attorney, they give that to you. You take that as all these three documents. It's called the PPM, the Private Placement Memorandum, and you're going to take this out to your investors. Right? You're going to go out to your investors. Remember, you had a list. We had a database management list, and you had 10 to 15 people on there. You're going to take it out there. You're going to take it out to your first stage list. Right? The first stage list is your A guys that you really think are going to close on it. You're going to go out there and take it to them, the PPM. And then you're going to create this letter, right? There's a letter you create, and I call it a cover letter, because the PPM, you saw that document, it's hard to read, right? So most of these investors won't look at it, but they'll look at a cover letter. So if you put a cover letter over it, and you highlight all the things that are important, hey, we're going to expect to make this kind of money over this period of time. We're going to keep this investment small, but the main thing is you're trying to just sell them on the cover letter, and you're going to tell them, hey, if you're interested in this thing, got a lot of people that are interested. You got to move quick on this. We've got some people who've already subscribed, and it's going to close quick. So get this to me as quick as you can. All right, and so let's say you do that, and you fill out 70% of it. Then you're going to go out and develop in step 4. You're going to develop a second stage list. And these are the people on your B list. You're going to go out and do the same thing. Then you got, let's say you got your short, 10%. You're going to go out and develop a third stage list. Now, on the third stage list, it gets a little bit more critical, because you need to go out and start talking to a lot of people. So you can go out and talk to people that are the remaining people on your list, if you have some remaining people. But you go out and talk to people that you have that were already on your list that showed some interest, but maybe weren't as excited. Maybe something was going on in their life. Go out to all those people on your list, other people on your list, or even anybody else that you think is qualified. Go out to them and show them your PPM and get that last 10% raise. And the worst case is you're going to go back out to some of these investors and say, I'm short 10%. Would you willing to put it up? Right? So the last thing you're going to do, you close them into the deal. You're going to get them to sign your operating agreement. You're going to get them to sign your subscription agreement. You're going to get a check, and you're going to take all this and you hold on to it. You're going to take that check and you're going to put it in the Bank of Piggy. I call it. Here's Bank of Piggy. You're going to take and you're going to raise the money, like over here on the right side. You're going to raise the money right from these guys. It's going to go in Bank of Piggy. And this is the partnership agreement you're going to set up. So let me just back up on that. The syndication partnership agreement we just talked about, when you create that document, remember you had the operating agreement, that was the second document in the PPM. You're going to go out and you're going to create a bank account. I call it the Bank of Piggy. It's called the syndication partnership account. And everything, all the money is going to go there. Money goes in and out of this partnership account. Whether you're, just raising money, you're going to pay yourself a fee. You're going to pay cash flow. All your property managers from all your properties, they'll distribute that money into this Bank of Piggy. This is your partnership account. So you're going to pay capital expenses out of this account because you're going to raise it, right? That'll be in this extra remaining cash. You're going to raise an extra 250 for CapEx, rainy day fund, closing fees, your acquisition fee. That's all going to be in this cash remaining right here. So it'll sit in that account and you'll pay out of that. But that account's also going to get fed, right, from cash flow from those properties. Now, maybe not a lot of properties are going to be out of the gate quick because we're doing value add properties. But by month 9, we should be getting cash that comes in here. Any expenses we have, we're going to have to pay the partnership. The partnership tax returns, right? We're going to have tax returns. We have some issue with the partnership. It's going to come out of this account right here. This is your operating account. Question is, what happens at some point down the road if this account gets empty? Well, you're going to have to do a capital call, and that's a whole different thing when you talk to your investors. That we show you how to do that. But that's how it flows. You're gonna coordinate with escrow, closing agent, and they're going to close the deal, and you're going to wire in how much money it needs to close. You have a remaining balance that you hold on to and work with, and then you start operating your property, start doing your reposition. So that's it right there. Just to reiterate and go over it, this is the process that we're going to go through. You're going to create a pitch book, investor list. You're going to do your meetings, stay in contact with the database. You're going to go out and create your documents created by your syndication attorney. Then you're going to take that document out and you're going to raise all your money, close the deal. And managing your investors, I just want to say that's a whole deal right there. You put together an asset management report, and in that asset, you're going to talk about leasing, you're going to talk about management issues, you're going to talk about construction issues you're working on. You're going to talk about, hey, last month we were at $450 in rents on the ones, now we're at $525 or whatever. Show them some progress. Also take before and after pictures from the same spot, right? They want to see progress. And when they start to see these asset management reports and they start to see the before and after pictures, man, they get excited. They want the next deal now, right? They want it now. And they're going to bring in their buddies. So this is the gold step, I call it, manage your investors. And if you do a good job of that becomes maybe dedicate that to somebody, you're going to have all the money you want right here. You're going to have a hard time finding deals. All right. So get your first deal done, right? First deal done. And now let's talk about the case study here. We got Chris Hake here. Here's a guy that's been in real estate for, gosh, I think he said 20 years doing small investments, mostly houses, but he's done some small duplexes and maybe fourplexes. But he really wanted to step up. He wanted to go to the next level. He wanted to start buying bigger properties. And so he looked around trying to find a place he could learn, right? And he came across Dan's Summit. And I guess Dan's Summit was in January this year. So what is that, 6 months ago? But he was marketing it before that. But he found out about it, got signed up to that program in January, and he really wanted to dig in. He knew he needed the training. He needed the training really bad because he didn't understand it. He kind of had an idea, but not the big stuff. So he wanted to enroll. So he enrolled in the program, the January program. And he went through the program. He studied vigorously. He was really into it quite a bit, he says. And then he said, okay, that's done. He found 4 or 5 guys that he wanted to really take the next step with. And he decided to pick me, thank God. And he picked me, and we worked on it. He joined my I had a boot camp at the time, Raising Money Boot Camp. It was a 5-week program. And it was amazing to see him work because he was so far ahead of everybody else in the group that, he just got his whole Raising Money program, pitch book, everything done in 4 weeks. He was early. That's just, I never had somebody get something done early like that. And he worked hard. So what he did was he got it done. He took his pitch book out to his investors when we learned how to raise money. He took them out to his investors, got everybody excited, found a deal, right? He got his money lined up, found a deal. And they gave him the money, got it closed. And in 3 or 4 short months, he got that deal closed. So from the time he joined Dan's program in late January to about middle May. He went through the whole learning process, got the training, went out there, hustled, got a deal under contract, and got it done. So I just want to show you the deal he did right here. So his he bought a property. It was two buildings, 16-unit buildings, and he's in Wisconsin, Fitchburg. Current rents he had basically 16 one-bedroom units, 16 2-by-1 bedroom units, and the current rents were $674 in the ones and $759 double dollar signs. Class B and C. All the stuff matched his business plan, what he's looking for. Remember that we to go out there and find a property that matches your investment strategy, and he did that. And he found this property. His location was also B and C. There was 3 vacancies, 18.7% vacant. He kept the property in overall good condition. Seller owned it for about 12 years. The value add opportunity on this thing was the ones he could raise to 807, and the 2-by-1s he could raise to 907. So that's about a 19, almost 20% rent increase. And that's what he's up against right now. It's probably take him 18 months to get that done, but he only needs mild renovation. He doesn't really need a lot of stuff. He's going to probably turn it in from a C garden style to maybe a B minus, maybe B. We'll see. And again, some of the opportunities that it's 18.7, so he's going to get that cleaned up, right? It has strong cash flow right now. It's doing pretty good. The seller owned the property, didn't do much to it, just kind of kept things that needed to be done. He got done, so we got him done, and so it left Chris with not much to do. I mean, not much. I'm saying not much, but not like a serious rehab. You have to worry about things. It was pretty easy to do. So he bought the property for $1.8 million. He got a loan for $1,440,000, 80% loan to value, raised $650,000 using debt at 8%, simple interest, paid annually, no equity. So this debt, we're equity guys. It decided to take debt. That was his equity piece, but he turned it into debt. So he didn't give up any of the back end percentage. And then he brought in two co-GPs to guarantee the loan with a 5% equity. He paid 2 guys that would guarantee the loan that needed the balance sheet. And he got them to only take 5%. That's a pretty good deal right there. So the total deal was $2,090,000. That included all of closing costs and everything he needed. And he got 90% of the back end, 90% of the cash flow. He gets out 90%. All he's got to do is pay his debt guys, right? And so he put really no money in this property. Maybe a small amount to do a few things, but really no money. This is a home run. This is what, in 3 to 4 months? I just can't believe it. So great job, Chris. Chris might have been on the line with my feeble experience with this online stuff. I can't talk to him. So anyways, so there you go. That's a great deal. So I recommend that you guys get involved with this. If you're serious about this, get involved, be dedicated. You can do this stuff. It's out there. It just takes hard work like he did. Like anything, right? Anything you do, you got to put in some hard work. And don't be afraid. Don't be afraid. Let's take a look at his pitch book real quick. So here's cover page. This is what multifamily is looking for. Kind of his group he's looking for, millennials. Here's his highlights. We talked about the 4 bullet points: accomplished management team, acquisition strategy, growth market, investment returns of this. Or company overview. He talks about big picture of his company. Here's a picture of him, his bio. He's been in business over 22 years. I saw 20. So there's Chris. Here's his advisory board. He put, to give him strength. He got some sharp guys on here, 3 guys who put that on here. He's got some case studies using one of mine right here. He's got his unique investment strategy, unique acquisition strategy on one page. Very clearly, he's looking for underperforming properties, going to reposition them, implement a competitive advantage, the AML program, and then he's going to hold the property for 4 to 6 years. And here's what he's looking for. Here's his target market. He's going to go fishing. This is the kind of fish he's going after. Okay. Here's the people that he's going to fill the property with. He already knows who they are. Most of the guys don't know that. So there you go. And he knows who's going to live, the types of people, the type of income and everything. So he kind of knows these guys before they can get there. Here's his competitive advantage formula. Here's if he does upgrades. Here's his rents he's going to upgrade it with. Quick way. So I'm running out of time here, but you kind of get an idea here. There's this living problem solution I talked to you about. Keys to success. So let's get back. I want to just finish up real quick. I'm not going to spend a lot of time on this. Can you guys see this web page? Or do we have to share that page?
No, I can see it.
Okay, good. So I've created a game called the Syndicate Game. This is brand new, never been done before. It's for people that want to learn this business without getting hurt, without really, taking a big cost. There's all these people that want to get in the business. They go all these training programs. They don't succeed. Only 8% get through it. In this game, we're going to go through the whole path. We're actually going to do this stuff. We're going to fill stuff out. You're going to compete with one another. You're going to build your pool investor, get your acquisition strategy. You're going to analyze the deals. You're going to find them. You're going to finance them. You're going to do all that stuff. You get the money raised, and you're going to close it. And you're going to compete against one another. And we're going to use the syndication simulation process. And so in the simulation process, you think about if you learn a new language, you got to immerse yourself in it, right? If you're going to learn stocks, you're going to paper trade. That's the easiest way to learn. That's why I learned when I started trading stocks. I made my mistakes, so I got out there using my own money. It was a lot safer. NASA, think about all the simulations they do, or airplanes, flying airplanes, doctors, and big semi trucks, police officers. All these guys are using simulation. Trial lawyers. So we're going to change the game plan. And we do this because you're going to make mistakes. And there was a successful entrepreneur story, real short. It said that it was actually an interview that was done. And the successful businessman was once asked, how did you become successful? How did you become something? Making good decisions. How did you make good decisions? Getting experience. How did you get experience? Making bad decisions. So this game is all about making bad decisions. So when you get out in the real world, you're going to make good decisions. So this game, you can go ahead and go on here. It's called thesyndicate.com, thesyndicate.game.com, thesyndicate.game.com, right up here, syndicategame.com. Go on there and look at it for yourself. Here's all the things you're going to get. You'll see all the things I'm going to be with you for life on emails. So you're not going to get the support. We only have 15 spots. It's only for guys that are doing multifamily. It's only for guys that are beginners, startups, and intermediate level. People are advanced. We're going to have another game for advanced people later. It's cost of right there. You can see we're discounted half. And we recommend bringing a partner, and it's free because we found that through our years of working with people that work with other people have more success. They're able to lean on each other. They can kick each other in the butt. They come up with good ideas. So there you go, Brandon. I'm sorry I went a little bit over there.
No, you're fine. Hold on 1 second.
Any questions I can answer? I just didn't stop.
No. You're good to go. So you had till 1:45. So we're plenty good on time. I'm going to just leave the audio up for now. So we have a question that says, is the syndicator paying for the PPM, and what other upfront expenses should the syndicator cover?
Good question. The syndicator pays for the upfront costs. You get reimbursed for all this stuff. And make sure you get a good syndication attorney. Guys that really know what they're doing. You might pay $15,000, $10,000. I would pay it, and all you're going to do is you might have to come up with the money first. But when the deal gets closed, you get reimbursed all that money, even closing costs. Even if you're going to have to pay third-party reports, any of those fees. You might have to come up with 6% of the deal, plus closing costs. What I do, I try to get these guys to bill escrow or bill the closing agent, and then when I wire money in to close the deal, I obviously have they add those invoices in and they get paid out of escrow.
Yeah, and there's different ways to structure your deal so you're getting reimbursed from that. You said so for like PPMs or other like driving to the property. Let's say you had to fly to the property, plane tickets, different things like that. Are you doing that through acquisition fee or through reimbursed expenses in your GP?
Acquisition fee.
Acquisition fee. Okay.
Yeah, I mean it's because, and I had a deal, a 400-year deal that we lost right 2 weeks before back in 2008 when the market changed, the financing market changed, and rates went up 175 basis points. So a deal didn't work, and I spent $40,000 on going back and forth, like you said, and I just had to eat that. But you're making good acquisitions. It kind of averages out. There's some deals that just aren't going to work. Doesn't happen very often, but you're getting some pretty good fees. But you deserve those fees because you're working your buns off.
Yeah, and I think that's what a lot of people don't think about. There's some groups. I know one in particular, and I won't name them, but they don't charge acquisition fees, and
crazy
discussion about that. And that's exactly what I said. I said that's absolutely absurd.
I had a guy I worked with. They're managing like $250 million right now. But when he first started his first deal, he only took a $30,000 fee on a $3.5 million deal. And I said, dude, you're working your butt off, man. There's no way. And so they saw they were working the butt. So they went back to the partners and raised it up to $100,000 just so they could see how much they were working. They were working night and day.
Yeah. Oh, yeah, it's a ton of work. And it's not only just the work on that particular deal. It's also all the work that you did on all the deals you did not get. And that's the biggest.
Right. That's what I'm saying. Yep.
I mean, especially now when there's so few really good deals out there, you're looking at a ton of deals going, you have to streamline your process so you're not running all over the country looking at every deal. So you have some precursors that filter, but still, I'm sure you have, I have, we've had deals go best and final round. And you spent hours and hours and hours on that deal doing comp study analysis and everything else, underwriting. And only we've had it where the seller just decided not to sell because they didn't hit their BOV or whatever they needed to hit to, so you never know.
About all that time. You got to go out and source deals. That takes a lot of time. Run around and look at deals, talk to brokers, talk to people. You got to analyze it. It takes a lot of time to put that into your underwriting software. Then you got to go out and negotiate the deal. You got to do all the due diligence. It takes a lot of time. Getting the debt lined up and getting your equity guys lined up. That takes a lot of freaking time. And a lot of times it doesn't go through like you said, but I haven't had that happen a lot. Yeah.
And we've had, a couple times just, it's tough and everybody hates it. You get, in final round and, it's down to two people and, somebody's just got a little bit better terms or, has done another deal with the particular seller before. So they're more comfortable with them, it's frustrating, but it's part of the game and you have to account for that in your time valuation. All that time spent. I was trying to see, we have, how do you create a pitch book is a question that we have. What programs and or services do you recommend for doing that?
I don't know anybody else that does it. So just go to the valuehandacademy.com and you can check it out. But the pitch book is everything. The pitch book becomes who you are. It becomes your brand. It becomes what you're known for. Right? It's the core of what you're doing. Everyone that I've worked with have said the pitch book is really the core of their success. Everybody.
Definitely. And I'm going to put
the guys that I were in Florida, they bought this little small deal. They bought it for $7 million. 2 years later, they sold for 11.5. They were doing student housing. They had the pitch book, put the thing all together. Then they went out and talked to a big family company using their pitch book, and they ended up doing a joint venture with them. And now they're managing $250 million of property just because of their pitch book. It's the most important thing. So you got to get a loan, right? You get a loan so they see what you're doing. That blows them away because no one's doing it. And you have some more success.
Well, it's different ways to, people you come in contact with, different things. If you just, take it in the doctor's office when you're reading, the the doctor's like, hey, what's that you got there? Oh, well, I was just reading up on my pitch deck. Here it is, and this is what I do. Hey, a lot of times they have money to invest, so different ways you can use that.
Yep.
I posted the link to the Value Hound Academy in the chat box, so everybody can just click on that link.
And then post the syndicate game as a Facebook link.
Okay. Syndicate
Maybe you
game.
don't need to post that, but there's a lot of good information in there. And there's tons of free information. I mean, I got videos, I got audios, I got articles on everything in this business that I've learned for the last 35 years and gotten beat up and had some success.
So we got a couple more questions here. How many players are there or playing against in the syndication game is the question.
Maximum 15. We're only going to have 15. I want to keep it small enough so everybody can interact. It's going to be 3 full days. We're going to have lunch. We're going to have breaks, but 3 full days of going through this whole process. You can see this road right here. We're going to go through the whole process. We're actually going to do this stuff. We're not going to I'm not going to sit there and talk to you like I am now. We're going to do this stuff. You need to do it. This is how you learn. This is how it sticks. You need to make mistakes. You make mistakes, you learn. You learn from those mistakes, you get better. You get better and you make more mistakes. That's how you grow. And we want you to do that inside this game so that you can make good decisions. Remember, it's all about making good decisions to be successful.
Yeah, definitely. And I have another question here. Do you ever have to deal with off-market property if you're new and don't have a relationship with a broker or facilitator, and they say you need to show proof of funds in order to get the financials? How do you address that if you don't have money raised yet? So 2 different questions there.
Well, I would say if you don't have the money lined up, I wouldn't be out making offers. But if you do happen to make an offer and it's a really good deal, hopefully it's a small deal. If you're just getting started, it's easier to overcome these issues. There's forms you can get to go out and bring, just like Chris did. He brought a couple guys in that qualified for him. So you can do the same thing. I don't know. You got to go out and if you get your pitch book done, you take it out, you're talking to investors. Some of those investors will be your guarantors. I mean, to 5% is pretty good. Usually it's 10 to 15%, but 5% is pretty dang good.
Yeah, and it depends on the size of deal you're looking for. So, on your broker traded stuff, you're not going to get that question on your larger 100-unit institutional size. So, I've never had that question posed.
I haven't either.
But on I think it's more of your mom and pops or your more real estate agent listers or, LoopNet type properties.
If you take your pitch book and you plop it down, you're going to blow them away. They might not even ask for it because they're going to say, hey, your property fits what your investor judge. It kind of goes there. The sellers sold a lot of properties. What the sellers are looking for a good price, but looking for the right match. They want the right buyer for the right property because they know it's going to close. Same thing with any size property, really.
Yeah, definitely. And, I'll go back to the off-market property question. So, that's you want to tell the attendees kind of how you define off-market?
Yeah, off-market is something that a broker brings you or you find it yourself. I mean, ideal if you're out there, you got to go out there when you're trying to source deals, especially now in today's marketplace. You got to build relationships all over the place. You got to stay in contact with these brokers. They're out there talking to owners every day. So sometimes they come across properties. The owners say, "Oh yeah, I'm thinking about selling this property," but they don't list it, right? So it's an off-market deal, and they'll bring that to you, right? And I've had a lot of guys I work with. That's where they get their deals. And once in a while, they go out there and actually find a seller, sell them these letters, or call them on the phone. But that doesn't happen too often.
Yeah, and there's we talked about time in deals that you did not get or going into what we call best and final round or second round. And that's a regularly listed one with a broker. So your off-market deals, I love off-market deals, and that comes from building relationships with the brokers. And especially if you've already closed the deal with a particular broker and he knows, she knows, they know that you can close deals, they just say, hey, I got a buyer, and they just come to you. They've already done the BOV, the broker opinion of value on the property, and they just say, here it is. And we've locked a deal up in as little as 20 minutes after tour. on an off-market deal on, over $15 million deal. So those are great because it's so much less running around and bidding back and forth. It doesn't drive the price up, bidding back and forth with other buyers. So we love those off-market deals.
Well, let's talk about real quick. How do you get these brokers to work with you? What if you're just new and they don't want to work with you? Well, one of the best ways is to have a pitch book and throw that thing down to give them, because remember, brokers don't make any money unless they close the deal. So exactly. You got to believe that if they're going to work with you, they got to feel good that you're going to close the deal. And so you got to build yourself up to the person that, hey, this guy's going to close the deal. If you put that pitch book down, no one does this. So when they see this stuff, that's going to give you more credibility.
Oh, definitely. Yeah, definitely. And we have another question here. They said, does the game have lifetime support?
Yeah, I'm going to be, yeah, exactly.
Yeah, and it has lifetime support, but but the course of one gameplay lasts 3 days.
It lasts 3 days, right? Yeah, it's full days.
Everybody participating has to be there in person, or is it played online? How does there?
Yeah, it's a virtual. It's played online, so everybody's going to be there. We're going to work this to get together.
Okay.
We're all going to be interacting. We're all going to be competing. I'm going to be training on each one of these steps as we go forward. So now you're going to get the training like you just got here, and then you're going to actually go do this stuff. So you're going to actually have forms. You're going to have a pitch book form. And you're going to fill it out. It's very simple. I'm not going to make it too hard, but I want you to go through certain steps. We're going to have you fill out a warranty deed. We're going to have you do the whole process. We'll have you actually fill out a closing statement. Most people don't know how to do that. I want to make it real simple, but just to understand what happens in closing.
Yeah, the different steps. Yep, definitely. Well, be sure to go to the website and to the Facebook link for the syndication game and check out the game. Play that. Go to valuehoundacademy.com as well. We've got over 600 articles there. Lots of resources here from Craig. Craig, we appreciate you joining us today. And thank you for I remember you did the interview with me in January, and it's great that you brought a case study from a direct result from the conference that we did in January. So
yep, I'm hoping for another case study for you.
yeah, that's great. And that's what we like to hear: success stories, people that took action, they received the content and took action. Because I think the thing that you'll find with listening to these panels that we have, like from Craig here, is it's real actionable content. It's not, it's not just a bunch of fluffy stuff and trying to sell a bunch of stuff. It's actual working knowledge on how to do things. And that's really what goes above and beyond with this conference. So, Craig, thanks for joining us again. And I think that we've answered all the questions. So great job there. And we look forward to having you hopefully on our next conference coming up again this coming January.
Okay, great. I appreciate it, Brandon. I appreciate the invite and allowing me to answer some of the questions and to help some people that need help.
All right, Craig. Well, you have a good rest of the day.
You too. Take care. But good luck on your conference.
All right. Thank you, sir.
Okay. Take care.
All right, everyone. Thanks again for joining us for that session with Craig Haskel. Great content there. Had a little bit of technical difficulties, but no worries. We made it through. That's what we do. We adapt and overcome, right? So if you want to get entered for the iPad drawing, be sure to go to nextmfin.com and register for our January summit. You'll get one entry there. Go to the podcast, Multifamily Investor Nation podcast, post a review, take a screenshot, send it to Stacy at multifamilyinvestornation.com, and you'll be entered to win another entry there. And participation. Just be everywhere all the time. Check out all this content. It's great stuff. If you walk away from this not knowing more about syndication than you did when you started, then you were not paying attention. So be sure to join us for the next session coming up. This is a great one. Thomas Castelli. I love listening to Thomas speak. He really is an authority in his area. So he's going to be talking to us on how to maximize or minimize, that's the wrong term, how to minimize taxes on all those millions when you exit your deals. Okay, so forward thinking, and and really benefiting from the tax laws that are out there. So these tax laws are written for a reason, and to not take advantage of them is your loss. And so be sure to tune in with Thomas on that at 2 o'clock. Room 1 is going to have the multifamily show and tell workshop, how to pick the best cities and neighborhoods in the U.S. with Neil Bawa. So check that out. Neil has some great resources, websites, different things to check on markets, submarkets, hypermarkets. So be sure to check out that in room 1. And Dan, that's Dan's camera there in front of me. He's looming over me. And
what you working on over here?
That's right. Just trying to, finish this session up here real quick. And in room 3, if anybody wants to go see Danny Randazzo, he'll be with Scott Smith going over documents, financials, and documents and financials you should have in order prior to exit. So be sure to check out room 1, 2, and 3. We all know room 2 is the best. So we'll see you just in a few minutes. Thank you.